Have you ever wondered if your money would grow faster sitting in gold or invested in stocks? It's one of the oldest debates in finance, the shiny, safe stability of gold versus the wealth-building power of the stock market. But which one is actually better for you? Well, today we'll break it down, covering the pros, cons, risks, and strategies. So by the end of this video, you'll know exactly where your hard-earned money could work best. 1. Why people love gold. Let's start with gold. Gold has been a store of value for thousands of years. Ancient civilizations used it as currency, and even today, central banks hold massive reserves of it. Why? Because gold is considered a safe haven asset. When inflation rises, currencies weaken, or stock markets crash, people often rush to gold. Historically, it's one of the few assets that tends to hold its value when everything else feels uncertain. For example, during the 2008 financial crisis, while stock markets were collapsing, the price of gold surged. The same thing happened during the pandemic. Investors turned to gold as a hedge against fear. So if you're the type of person who values stability, safety, and long-term preservation of wealth, gold might feel like a comforting choice. But there's a catch. 2. The downsides of gold. Here's the problem with gold. While it protects value, it doesn't produce value. Think about it. If you buy a bar of gold and hold it for 10 years, at the end of those 10 years, you still just have a bar of gold. It doesn't pay dividends. It doesn't grow earnings. It doesn't innovate. In fact, over very long periods, gold has underperformed stocks by a wide margin. Yes, it can be a hedge in times of crisis, but if your goal is to build wealth, relying solely on gold will likely leave you behind. 3. Why stocks shine. Now, let's talk about stocks. Stocks represent ownership in a company. When you buy shares of, say, Apple, you own a tiny piece of that business. And here's the magic. Great companies grow. They expand into new markets, create new products, increase their revenues, and over time, reward shareholders with rising stock prices and dividends. Historically, the stock market, especially in the US, has delivered about 7 to 10% annual returns on average after inflation. That means if you invest $10,000 and let it grow over 20 or 30 years, the compounding effect can turn it into hundreds of thousands of dollars. That's something gold simply can't match. 4. But stocks have risks. Of course, stocks aren't perfect either. They're volatile. Markets can drop 20%, 30%, even 50% during crashes. If you panic and sell during those downturns, you can lock in massive losses. Unlike gold, which tends to hold value, stocks require patience and emotional discipline. You have to be able to ride out the storms to enjoy the long-term rewards. And unlike gold, stocks are linked to specific companies and economies. If businesses struggle, your investments take a hit. 5. Which one is better? So, which is better, gold or stocks? The truth is, it depends on your goals. If your main concern is preserving wealth and protecting yourself against uncertainty, gold has its place. But if you want to grow wealth and build financial freedom, stocks are historically the better performer. That's why many financial advisors recommend a mix. Hold some gold, maybe 5 to 10% of your portfolio, for stability and hedging. But keep the bulk of your investments in stocks, ETFs, or index funds for long-term growth. This way, you're protected during crises, but still building wealth when markets are strong. At the end of the day, gold and stocks serve different purposes. One is a shield, the other is a sword. If you're serious about building wealth, don't choose one or the other. Learn to balance both. So, which one do you prefer, gold or stocks? Drop your thoughts in the comments below, because this is a debate that never ends. And if you found this video helpful, make sure to like, subscribe, and share, because financial freedom is built one smart choice at a time.